Good morning, everyone, and welcome back to Morning Markets on Friday, the 10th of July. A couple of things to discuss today. The first of which was just looking at how asset markets performed yesterday and very much a focus back on COVID-19. Why do I say that? Well, just the number of rising cases that we're seeing within the US and a number of states, and indeed a larger number of states. And then just the smaller outbreaks or reoccurrences that we're seeing as economies reopen, from Hong Kong to Tokyo in Australia as well, and here in the UK and some other pockets. So clearly the market focusing back on that. Why? Because it has an impact on the speed of reopening, the speed of economic recovery, and that then feeds into how asset markets discount that. Yesterday it was interesting to look at equity markets in particular, and clearly equity markets had a negative performance across most geographies. Digging down into that a little bit, what can you see? You can see at a sectoral level some divergence. And we saw technology as a sector continue to perform yesterday. Indeed, it closed in positive territory. And that just builds on that trend that we've seen over the past number of months and indeed over the longer term. If you cast your mind back to what we were discussing a couple of weeks ago, we were talking about what looked to be a broadening of the support in equity markets to other sectors, and they were starting to show recovery trends as well. That has stopped over the past couple of weeks, and clearly market leadership has returned to technology and to an extent healthcare. And we've seen those more economically sensitive sectors such as energy, industrials and financials underperform the broader market at this point in time. So that's something that I think is worth noting, because the leadership in the market has again narrowed to technology and a number of the large mega cap stocks within that, and healthcare, something for us to continue to observe. Whilst there was that negative tone in equity markets, clearly there's an offset to that, and that's one of the benefits of multi-asset investing. We saw a stronger performance from sovereign bond markets. In the US, we saw the 10-year yield approach sort of the floor that it set itself over the past number of months at 60 basis points, just indicating the flight into those safer haven assets yesterday as that yield moved down. So a bid for sovereign paper. And a similar trend in the UK as well, where we saw the UK 10-year yield move down to 15 basis points, and both the 2 and 5 year gilts trading with negative yields yesterday. That's something again that we'll continue to see over the coming number of days, to see how that evolves and how economic data is impacting the yield movements that we're seeing on some of these sovereign bonds. On the economic data front yesterday, what did we see? We saw further details on the unemployment trends in the US. So the weekly claims number. The weekly claims came in at 1.3 million versus 1.4 million last week. So continued improvement in the rate of decline and in the number of new claimants coming onto the system. If we look at continuing claims to get a better indication of just what's happening, continuing claims come in at about 18.1 million, so a very large number. But again, that has come down slightly over the past number of weeks. What it does show and what it does illustrate is really the ongoing need for fiscal support to be there, and for fiscal support of the job market to be there as we try and bring employment back into the economy, not just in the US, but in other economies as well. And it just also, I suppose, does illustrate the magnitude of the challenge to get us back to we were pre-COVID levels in terms of employment in the US, but also in other economies as well. Turning to overnight markets in Asia, we've just, I suppose, seen a continued follow through from that slightly weaker performance that we saw in Europe and the US, with the majority of markets in Asia slightly weaker overnight. Turning to next week, we start to enter the second quarter 20 earnings results season, and we'll get details from the major US banks towards the middle of next week in terms of the trends that they've seen and witnessed in the second quarter. I think that'll be interesting for a number of factors, primarily to get an insight into how they've performed, what's been the trends they've been seeing, and how that impacts their view and thinking about earnings trajectories over coming months and quarters indeed. So I think that'll be a very useful thing for us to observe next week, and may set the tone for equity markets. Indeed, it probably will, depending on how those results look to market participants. That's it for me for today. Please look out for the podcast, which will be coming out later today, and also our weekly note, where we'll focus on what the Chancellor has set out for the UK over the coming months, and indeed the details that he's provided around the various support programs that are there. Please look out for the podcast, which will be coming out later today, and also for our weekly note, which will go into more details on the proposals that the Chancellor set out yesterday to support the UK economy. Many thanks for joining us. I look forward to speaking to you again next week.